There is trouble brewing it's not just brewing in real estate, in office and multifamily real estate, it is here. And in private equity, it is here. We are hearing of private credit companies, private equity and private credit companies who are being forced to take equity because companies basically would go bankrupt. They've basically run out of cash. I think you're going to hear more and more about that. And we're also seeing a lot more bankruptcies. Just poof. But these are not getting the headlines.
ARK Invest founder, CEO, and CIO Cathie Wood continues to maintain a pessimistic outlook on the U.S. economy for 2024 and 2025. In a post on social media platform X, Wood warned of an intense search for cash and safety in the U.S. stock markets, comparable to the Great Depression of the early 1930s. She stated, "In our view, the search for cash and safety in the equity markets today is as intense as during the Great Depression in the early 1930s. When fear dissipated, the market broadened out and rewarded risk-taking once again. In the fourth quarter, as the Fed's dot plot began pointing to much lower interest rates, the bull market in equities broadened dramatically. Thus far this year, the opposite has happened. In our view, more price deflation and lower interest rates will activate coiled equities." In the latest episode of her monthly In the Know broadcast, Wood shares crucial economic indicators and market signals, which she believes indicate turbulent times ahead for the U.S. economy and markets. One indicator Wood is particularly concerned about is the growing number of bankruptcies and retail closures. Thousands of brick-and-mortar retail and dining establishments have shut down across the United States in recent months due to inflation, stagnant wages, and higher borrowing costs. Data from Retail Tracker Core site shows a 24% increase in store closures in 2024 compared to the same period last year. While a few stores like Dollar General and 7-Eleven plan to open new locations, Core site reported a 4% decline in new openings compared to 2023. Wood warns that despite the official narrative that all is well with the U.S. economy and markets, signs of looming troubles could plunge the entire economy into a deep recession.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
When I went through all of the economic indicators and said, okay, this one came out better than expected, this one worse, the ratio last month was about 3 to 1, almost 4 to 1. Worse to better. So the economy, some headline numbers look fine. And one of them is the employment report that came out today. So the employment report, again, had something for everyone. Non-farm payroll, employment, 272,000 person increase. That was much better than the 180,000 expected. The previous month was revised down to 165, so that was somewhat weak, but nonetheless stronger than expected. The household employment is dropped by 408,000 people. Now, what we're learning as we go through and parse through the employment, who's gaining employment? Well, foreign-born immigrants are gaining employment. Some of them legal, some of them not legal. It is native-born people in the United States who are losing their jobs. This is very clear now. Foreign-born employment is out to an all-time high. Native-born employment is down and falling. So that's very interesting to us. And it was very weak the month before at 25,000 as well. The unemployment rate, we've now got a 4 handle, 4%. Remember, it had been in the low 3% range, and then it picked up to the high 3% range. Now we're at 4%. That was worse than expected. Average hourly earnings, better than expected if you're a wage earner, but worse than expected if you're the Fed, 0.4%. Expectation 0.3%. Now, the previous month was 0.2%. Maybe that averages out to 0.3, but nonetheless, hotter, as the Fed would say. Average work week was just flat. Private hours worked, pretty flat. That's not a strong sign. Temporary help, the last indicator that I think the Fed really pays attention to, down 14,000, and it was down 12,000 the previous. So it has been in a declining trend for a while, as have the leading indicators. I think when history is written and these data are revised, and they are usually revised after a year and then especially after 5 years, I think this rolling recession that we've been talking about will have turned into an outright recession sooner than the statistics have been representing. So, and you know what also explains that is earnings reports. Earnings reports, sure, there are some great earnings reports. Walmart has had great earnings reports. Most other retailers have, and Costco as well, most other retailers, terrible reports. As these headline numbers come out and these headline stocks report, I think the sense that is that all is well. But when you dig into more earnings reports, you will see that is not true and that margins are coming down. And that we think is going to accrue to the benefit of innovation. Innovation solves problems. Technology is going to help increase productivity and keep those margins as high as possible.
S&P Global Market Intelligence recorded 62 new bankruptcy filings in May and 275 year-to-date filings for 2024, just two fewer than the 277 filings during the same period in 2023. Despite easing borrowing conditions, 637 bankruptcies were filed in 2023, just one fewer than the tumultuous 2020, making it the third highest since 2010. With ongoing struggles related to high interest rates and shifting consumer spending patterns, particularly among the poorest Americans, experts predict that 2024 could be even worse. In her video, Cathie also discusses the shifting political dynamics in the United States, especially regarding the cryptocurrency industry. Recently, the U.S. House of Representatives passed the Financial Innovation and Technology for the 21st Century Act, which establishes a regulatory framework for cryptocurrencies and delineates responsibilities between the more crypto-friendly Commodity Futures Trading Commission and the Securities and Exchange Commission under Gary Gensler's leadership. The bill requires that blockchain networks recognized as functional and decentralized be under the purview of the CFTC, while those recognized as functional but centralized will be under the purview of the SEC. According to Cathie, the bill is a significant victory for the cryptocurrency industry, highlighted by the fact that 71 Democrats crossed party lines to vote in favor. Cathie also discusses President Joe Biden's veto of the resolution to repeal the SEC's Staff Accounting Bulletin 121 and its implications for the industry moving forward. Here are more clips from the video.
Interesting thing from an innovation point of view that has happened on the fiscal policy front or on the legislative front is that SAB 121 and FIT or FIT 21, both of those are crypto legislation that actually passed through the House. FIT 21 stands for Financial Innovation Technology 21, the 21st Century Act. Now, the first one was vetoed by President Biden. And he considered it, I'm going to look at my notes here, inappropriate, inappropriate constraint on the SEC, which needs to put guardrails on such innovation in order to protect consumers. FIT 21 passed in the House with 76 Democrats voting for it. The SAB 121 passed in the House with 21 Democrats voting for it. This is very important. Crypto or digital assets has become a single issue vote for many people out there. And clearly these Democrats have been getting the message because the party had been reticent to vote for anything crypto-oriented. Elizabeth Warren and Bernie Sanders and others having had such a big impact on that side of the aisle. Now, at the same time, we have former President Trump taking crypto donations and making a pledge to uphold the rights to self-custody in the digital asset realm. This is huge and reinforces the notion that this is becoming a campaign election issue. And for young people in particular, it's a very important issue. So this is progress. This is the three branches of government balancing one another out. The executive branch, President Biden vetoed one of these bills. And then the judicial branch has basically said to the SEC, you are out of line in a number of cases here, very notably the Grayscale case, which ushered in the spot Bitcoin ETFs, of course. And so we're focused on it and happy that it's an election issue as these pieces of legislation pass the third branch of government, at least one part of the branch, that's the House. It remains to be seen if the Senate will take up the Fit 21 Act. It is an election year. A number of Democrats are voting now on the side of crypto, understanding how important it is to a significant portion of the electorate out there. So that's the most important thing that's happened on fiscal policy. And normally we're not talking about innovation when it comes to fiscal policy. We're talking about taxes and spending and so forth. And those are campaign election issues. But we'll get more into those as the campaign year progresses here.
A few years ago, no one would have thought that crypto would become a mainstream political issue in the United States, especially not after the events involving FTX and other crypto-related firms in 2022. Yet, less than 2 years after the collapse of the cryptocurrency exchange and its sister firm Alameda Research, the U.S. Securities and Exchange Commission has approved several spot Bitcoin ETFs and is on the verge of doing the same for spot Ethereum ETFs. Presidential candidates, including former President Donald Trump, are also showing support for cryptocurrencies to sway voters. We are only about 6 months into the year, but it has already been a historic one for Bitcoin and the overall cryptocurrency space. Do you think the U.S. economy is heading for more periods of uncertainty and chaos? Please share your thoughts on Cathie Wood's predictions and outlook on the U.S. economy in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.